when you choose a market, when you choose the sector, uh, and what is it still missing, how you can mitigate your risk, right? It's not about going in the market and not winning. You go with all the planning, but if the risks are not understood, if they are not mitigated, that comes to haunt. So let's look at how do you choose the market. So let's say we are looking at different markets, and we are trying to spot an opportunity. So we look at, let's say I see Middle East. Everything is happening in Dubai. Every day I read 10 news about it. Everybody wants to go there. What's happening? And probably then when I look at it, if I read yesterday's big newspaper event and saying that they opened the one of the largest data center costing more than about $500,000, and they aim to triple their capacity of data centers by 2030. They are promoting technology, they are promoting AI, but they're also promoting clean energy. A lot of consumption-driven economy is also on the rise. So, can I look at Middle East? I have been investing into exporting to US. I've been investing in that market. I've been dependent on that market. Can I look at some new markets? Can I look at Middle East? Uh, then I get to know that no, look, my friend has been exporting to Africa, and I'm hearing a lot about Africa. Yesterday, I was reading about news from German industry, and German industry was kind of declining in terms of their investment in Africa or the trade with Africa. And suddenly, the last year has seen the half the year of 2025 has seen a big uptick, right? So suddenly, everybody's spotting opportunity in Africa. Can I hedge my bets in Africa? Consumption is on the rise because the income has gone up, the spending power has gone up, the digitization has increased the awareness on many fronts. So FMCG business is improving, and FMCG business is improving, has a linkage with many other businesses, which is packaging, logistic. There is a big rise in manufacturing. So can I see and spot some of the opportunities there, right? So, for example, countries like Nigeria, Kenya, Tanzania, Ghana, they are all trying to localize. They are giving incentive to industries who want to set up base in some of these countries, uh, so that there is a win-win, right? In a long run, they localize it. I think one of the large processing plant is set up just now in Nigeria for onion processing. Yeah, and that's set up by one of the Indian companies. Now, that's the kind of opportunity and market that we can look at, which is not very traditional. For example, Europe, a lot of businesses that we discuss with, and when we discuss, let's say, US tariff or any situation, US tariff is very recent and hence the hot potato. But even if we don't look at US and before tariff war broke out, when people want to expand to new markets or want to hedge the bets, nobody used to look at Europe. And the usual excuse to get away is that Europe is premium. They would not look at Make in America. I know at least three to four business that we have helped across engineering equipment, automotive, food, and these businesses we have found high acceptance in Europe. So supply chain are being reset. Europeans are increasingly looking at Asian businesses. The reason is that there is, of course, American angle has just emerged, but before that, there's a huge dominance of Chinese businesses. However, Chinese businesses are not known for providing services, and that's where Indian businesses come. If you can provide good enough product and a great service, which Indian businesses are known for, uh, they welcome you with open hands. And there is a space where we can fit in readily. Now, this increases your bottom line. This opens up the completely new market, foot in the door in a market like Europe. So why not Europe? And it's the right time to consider whether we want to part of their supply chain ecosystem in electronics, chemicals, auto parts, some of these categories, right? Even despite US tariff, I think the trade deal that's being discussed, or even before the trade deal came into the discussion, the rates, the duty rates are still favorable to India. And we know we can't name some of the clients, but a very large client from US are already discussing how to set up supply chains with US manufacturer. And the shift from China is going to benefit India. So there is absolutely fine to look at US as a market if you're not already there. It's just that we have to figure out which sectors we want to be in, and in these markets, how do we want to enter the route to market, right? So, for example, EVs, batteries, semiconductors, even some of the automotive parts, this country is still offering great opportunity, right? So what is also important once we have understood the market or we have finalized the market and said these are the markets we want to go to, it's important to understand the trade routes. Trade routes are in fact being redrawn. Yeah, we know that how the trade moves in certain direction, and that's been constant over the decades, right? Um, and how money flows. And both the things are changing. So we need to understand, for example, let's say India, Middle East, East Europe corridor, that's actively being discussed. This has geopolitical corrections in offing, and this has certain supply chain being reset. So you must ensure that are you a part of this supply chain that's for the future? Right? Some of the trade agreements are being uh, you know drawn up, which the overall as globally we are moving away from the WTO kind of a setup, and then there is country to country, one to one free trade agreements are being drawn. So, am I part of those trade routes, and that decides how is the career path looking like for your business going forward? How's the future looking like? And whether you will reap those benefits or not. So, I mean, that's how you look at the markets. Uh, let's say you looked at the markets. How do you spot an opportunity in the sector? So for that matter, when you look at packaging, for example, right? So as I was explaining that there is African opportunity because FMCG is rising. This consumer base is a huge, large 1.5, 1.7 billion people. When they start consuming, the packaging is like the first thing that will be required. Or for that matter, Europe's EU's plastic directive. Now that requires some kind of innovation in compostable or monomaterial packaging. So if we are in this business, probably I would look at those opportunities and say, can I grab that? That may not be the largest consumer market in the world, which is US, but then can I look at these markets because that supports my business and my long-term goals? For example, electronics. Now we know that how electronics are being targeted through these duties and kind of things. Now, Europe, for example, Poland is emerging as Europe's new electronics hub. So if you are looking at Europe and if you want to distribute electronics parts or electronics goods or any kind of electrical goods, you have to be part of that supply chain and you need to be present in Europe. Right. Similarly, UAE is giving a lot of incentive to be in UAE, to manufacture in UAE, and so are you able to leverage those Make in Emirates kind of initiative? That's very, very important. Yeah. Now, if I look at food and agri products, again, which is obvious is that Gulf countries, UAE and Saudi Arabia, they are completely dependent. UAE imports about 85% of their food from outside, and they are trying to triple their population in next 10 to 15 years. So am I a part of that supply chain and ecosystem? Yeah, that could be a good market. Japan's population is aging and they are looking for packaged food. Now, if we understand their food habits and if we can be part of that packaged food and we supply, that could be a huge market. Similarly, chemicals, specialty chemicals. So chemicals is a big business across US, Europe, part of Asian countries. And that could be a very interesting one if we understand and spot certain opportunities, even Latin. So what is specific about Latin America is that a lot of US trade is expected to be routed through some of the Latin America market. And Latin America market themselves are growing, like Argentina is growing amazingly well. Brazil is doing very well. And some of the other economies are also kind of growing at a consistent pace. So can we be part of South American economy, which in a way directly also help us gain in the US market? Right? Building material. The unprecedented real estate boom and development is what we are looking at, let's say, in across GCC markets, UAE, Qatar, Saudi Arabia. Sometimes sports is driving it, sometimes real estate, residential, and official properties are driving it. Some Saudi Arabia vision and hence the construction is driving it. So whole supply chain of building materials is benefiting out of it, right? And cost pressures and inflation is not unknown across the world. So if you can be efficient, if you can be productive, some of these markets can really come to us. And the brand equity of Indian businesses has really gone up in last decade or decade and a half. And I think that's helping the business when you go out and try to tap this opportunity. It could be, I mean, I'm just naming few sectors. Yeah, it could be engineering, it could be technology, it could be renewable energy, textile, apparel, across these markets. In fact, we are working with few tech businesses, and they have great SaaS products. Best of the companies in the world are inviting us today because Indian companies are known for the kind of frugality and solution orientation. So they know that you're going to solve the problem and they know that you're going to do it cost effectively. So if you have a product, don't look at just domestic industry. That's something your home ground that you will tap every day continuously. But there is no point looking at step by step approach. It's a great idea to look parallelly alongside the domestic market. How can we enter the global market? And that's how 70, 80, 90 years ago all the American businesses did, right? When they start the business today in America, they look at what's my global opportunity at the time of design. And that's the time I think Indian businesses are also experiencing because of the constraint um, uh, that's been put on us, and that gives us an opportunity to look at different markets, different sectors, and say where do I find and spot the opportunity. Uh, and it's not that when we just understand the country that's sufficient. So, for example, let's say you go to US and you know that it's a big food consumption market. But where do I need to be? If I want to connect with the food companies, I better go to Georgia and be in Atlanta because Atlanta has some of the large food companies headquarters. Or maybe some of them are in New York, which is very near to it. If I'm in energy business, for example, and I know that traditionally Nevada, Arizona, Texas has been the largest energy hub. But if you are in renewables and clean energy, if you are in energy storage, then probably you would want to look at the eastern coast states like Georgia, South Carolina, Ohio, Indiana. Besides Texas, I mean, Texas will continue to be energy hub, but some of these states are having a huge ecosystem of the energy ecosystem, and you want to be part of it. Yeah. If you are in auto parts business, for example, then the whole Midwest supply chain, which covers your Michigan and South Carolina, Indiana, Ohio, that cuts on the eastern coast across, is where you want to be located. Right? So understanding a level below or two levels below within USA, kind of any country, yeah, is very, very important. For example, let's say you are in a financial product business, you have a fintech business or some kind of financial product, and you're going to Germany. You better be in Frankfurt and not in Berlin or Munich, right? Similarly, if you are in an auto business, then the Munich and the surrounding of Munich, for example, Stuttgart, where your Mercedes base is there, and that area around the Black Forest is where you want to be because your automotive ecosystem is over there. You're going to find the suppliers over there. You're going to find the partners over there. You're going to find the customers over there, right? Similarly, it depends on what kind of business you are. You are in green tech or logistic kinds of a business. You might want to be in Bremen and Duisburg. So, which country is your start is a first level. Within the country, in which areas you want to be is a second level. Third level of understanding, when you go to some of these markets and explore, you want to understand the clusters. So, for example, we were talking about Europe. Now, you want to tap Switzerland market. Would you go and appoint, if you're in a consumer business, would you appoint your distributor in Switzerland? If you want to open your sales office, would you open it in Switzerland? No. The reason is that so if you're looking at Germany, Austria, Switzerland, it's a cluster. And it always operates like a cluster, be it distribution, be it a sales operation, be it access to the customer base and the ecosystem. So you might want to be combine these market and optimize your solutions, right? Similarly, if you want to operate in East Africa and you want to avoid any duty, you want to leverage zero duty, you want to be either in Kenya or Tanzania or Uganda to leverage that duty free access, right? East and West Africa don't interact well in terms of the duty structure. However, East and South has a great synergy, some kind of trade agreement, some routes available where if you are part of East, for example, you can easily develop South inexpensively. So some of these understanding is very important. If you're going to, let's say, Middle East or North Africa market, kind of Algeria, Egypt, Turkey, you should know that the unit economics in these countries are extremely competitive, even if you're coming from China or India. So you need to understand that what you need to localize and how you need to go there. So one is when you're looking at an alternative is finding the market, then understanding your sector specific nuances, then understanding second and third level of detailing that where exactly I need to be in the country or what kind of cluster understanding do I need to have, and then you can look at the market how I can tap. So there is a process, right? How are we looking at market? How are we spotting the opportunity? How are we interpreting these opportunity and translating it into the business action? But the most important, and which all of you know, is that how quickly we are moving in to grab that opportunity. Because spotting opportunity, probably a lot of people do it, is that moving in quickly and grabbing the opportunity is where the actual probability of success lies. So I would invite Ankur, my colleague, who will talk more about it as that how you can quickly move in and once you've spotted the opportunity and grab it. Thank you.
Thanks, Ritesh, for that wonderful global overview and setting the context. I think everyone will find that very useful. Before I come and talk about how we go about spotting the opportunity and converting that into a proper solution, I'd like to run another small poll and try and understand how has the experience been for our esteemed attendees in their global expansion experiences in the past. And here you can choose multiple options as well. As you can see, there are about 5 options on the question.
Five seconds more. And here we see the results.
Great. So I think it's very much in line with what we have experienced and what we would expect. There is, I would love to meet the attendee who found the experience fairly easy, because that's generally not the norm. But yeah, these are the experiences traditionally of it being very complex, time consuming, and challenging. So let me now break down in the whole experience and the process as explained by Ritesh and how we go about it at Chrysalis. Ritesh, can you share the presentation?
Just a second. I'm finding a challenge. Moment, please.
No.
Audience, if you have any questions, please keep typing it in the chat box. We will take up all the questions at the end of the session.
Right. So what is Chrysalis all about? Basically, if I have to describe Chrysalis in a single line, it's a single window solution to your global expansion needs. We help our clients make and execute global expansion plans. In fact, that is the essence of Chrysalis. We don't like to call ourselves a consulting or an advisory firm because advisory is probably 10% of the work. Majority of the value addition that we bring to our clients is in the execution part, doing the difficult things on the ground. If I talk about advisory, uh, as Ritesh mentioned, it's very easy to identify the market or the opportunity because these days information is easily available at the tap of a finger on our phones. So generally the clients come to us with an opportunity, but what we do is in the advisory part, we will do the entire demand mapping, understand the market dynamics, match it with what the client has to offer, and design a complete go-to-market strategy, which is very specific to the cross section of the market as well as the opportunity and the offering the client has in place. Then what follows is the more important aspect of going it out there and doing the execution. So after having set up the market strategy, we do the complete on-ground execution, be it a distributor hunt in Lagos or a warehouse setup in Riyadh. We go out and get that done. And as mentioned by Ritesh, it's the entire ecosystem and the geography which is very important. So we also connect with the strategic partners, resellers, the influencers, and all the industry bodies and respective clients and create a full ecosystem to ensure long-term sustainable growth. We also help with hunting the growth capital for both as well as organic as well as inorganic growth. And another solution that we have is on market representation as a service, where a lot of the clients may not be confident enough to build their own team and do the execution on the ground. So we manage your international operations until your own team is ready to take over and grow the business from there. Now, you may be wondering how do we do so many things at the same time. So no, I recall a few years back, my LinkedIn description read that I'm a specialist at being a generalist, and I think that really applies to Chrysalis as well. We are specialists at being a generalist. We are sector smart and geography savvy. We look at every problem from a problem solving lens and identify the hurdles and come over that for the client. Now, where we add value is in terms of the speed to market. Now, while others are planning, you're already operation with Chrysalis. Now, that's the edge we bring because of our expertise and network across different geographies. We have a solution for e-commerce scale up where we help e-commerce companies parallelly set up in say 5 or 10 different geographies at the same time in a very short period of time. So instead of going testing one market, two markets, and scaling it up, it can all be done parallelly as well. So that's the edge we bring. Of course, we also bring in a lot of risk mitigation because of our extensive experience. When you enter a new market, a new geography, you may not understand the local nuances, how to do business um, as was mentioned earlier in the introduction, where uh, Walmart did not succeed in Europe, or for example, IKEA had to pull out of Japan. But we've done it 20 times over in the market, so we understand the risks and always have a plan to avoid those pitfalls. Lastly, we also help with cross-border compliance and regulatory readiness, so the be it packaging norms in Africa or FDI rules in Vietnam. We help you navigate those challenges so you're always on the right side of flow. Having said that, let me actually give you, and I don't think I have a lot of time in the next 3 or 4 minutes. I'll try and pick a few, just maybe a couple of success stories that we've had, and talk about clients that we've helped in their solving their problems. The first one is with a packaging client. It is one of the world's largest packaging company in plastic laminated tubes. They wanted to grow in Africa, but faced very fragmented demand. The challenge they were facing is they would tie up with someone in the local market, receive 1 or 2 orders, and then there is nothing for the next 6 months. So they did not have a strong regular distribution base. Where we came in is we mapped the entire continent, identified the top 5 markets, and onboarded representatives or distributors in those markets. We structured the entire pricing and supply routes. The outcome of all this is that in a matter of 18 months, they are operational in 4 African countries with 3x business growth. That's the kind of success that we bring in such a short amount of time. If we talk about another FMCG client, a very large FMCG client with a $300 million business in India, they have, unfortunately, I cannot name the client due to confidentiality issues, but they have some marquee brands which are household names in the country. They were seeking to aggressively push in the Middle East, but facing a lot of hurdles because of the local cultural nuances here. So what we did is we built a complete route to market strategy and secured regional distribution with the big players, enabled the regulatory approvals for this geography. The outcome is that now they are present in 1,200 plus retail points across 5 countries in the Middle East. If I talk about another client which is in the building materials aggregation space, they wanted to enter the GCC with very limited on-ground presence without having to invest in the country to begin with. We served as their interim expansion team. Like I mentioned, we help you test the market until your own team is ready to take over. The output is that now they are already present in UAE and Saudi Arabia with local warehousing and a large project pipeline in place. We also helped one of the large mid segment fitness equipment manufacturer from India who had a great product portfolio but zero visibility in the MENA region. We helped them identify the large buyers, presented them at events, managed the sales funnel, and within a matter of 6 months, closed 6 large institutional clients. Lastly, I'll also talk about one tech client of ours into the SaaS space, software as a service, who wanted to crack the Middle East and Africa markets with the objective of boosting valuation before the next fundraise. So it's a startup having an amazing solution. They were looking for the next round of valuation to be at a higher value and hence wanted to increase the top line coming from Middle East and Africa. So we drove the entire relationship building, acted as the local representatives, ensured the localization in the software so that the product is suited for the market, managed their leads, and represented them at every relevant forum. With an output that we onboarded 3 major clients, and their valuation was increased by 50% before the next raise. So that's what we do. We talk results. We don't advise. We go out and execute the advice that we provide for you. So yeah, I think we've run over by about 6 or 7 minutes. So I'd kind of leave it here and take up the questions that we may have had.
Thank you, Ankur. So audience, time for questions. We will take up 10 minutes. And if any of your questions remain unanswered, you can always email it as well. Here is a
While
question
we,
that actually I also have. There's an interesting question that says, how do we choose the right country to enter first?
So shall we answer? Ritesh, you'll go or shall I go first?
yeah, good. and we'll add if there is anything.
Okay. See, identifying the right country is, of course, the first part of the project that we usually do, as I mentioned. So while it's very easily intuitively available from news sources, say if you are in the packaging industry, and you can easily identify where packaging is being used maximum, where are the opportunities for growth areas. Generally, a very simple secondary or Google research would tell you which are the potential markets. Now you start from there, and that's where we come in, where we do an in-depth opportunity identification. We first, of course, understand the product exactly, because packaging is a vast space, right? You may be doing plastic laminated tubes, you may be doing a different kind of packaging, carton boxes. So depending on the product, the value offering, you have to match your product and value offering to where there is a gap in the market. So while certain markets may have a big demand, but there may not really be a need for you to fulfill. So the best way to go about it is, of course, starting with secondary research and then understanding the market through in-depth research, through talking to the right people in those local markets and understanding where you can fill a gap. There is no fun in entering a market where it is already crowded with players, your product is commoditized, and there is no real need for or value addition that you can bring in.
I think one more thing that I would want to add here, and I grew up in Gujarat and I have seen some of the Gujarati businessmen doing it like even 40 years ago, is like they just go there, you know. So you start where you see you start. Don't go by saying that this market is tough, this market is difficult. Is in fact the tough market is the best way to start because most people haven't gone there. Today, things have changed in last 10, 15, 20 years. The information available, the openness of the government, the local people. So every market has a solution. If you decide to go there, you'll figure out the way to go and grow in that market. Yeah. Some of the easy pick would already be crowded. So don't bother about it. If you spot an opportunity, and as an entrepreneur, you know that, okay, these are my 5 indications to see that, okay, there is an opportunity. Go there. Find out more. If you have time, if you have resources, do it yourself. If you think that you need help, we are always there. But enter the market, and I think that's important.
Right. There is another question that says, due to lack of team, we are not expanding our business even if we know the opportunity. How can the team help us there?
Due to skill,
Lack of team.
lack of team. Okay. Um, there are multiple ways. So, and we get that question a lot. In fact, we have helped a lot of businesses on that front. There are many ways, known ways to us. Our answer to our clients and friends always was that, okay, you don't have the team. You can borrow our team. And that's one of the solution, right? Till you find success, till you find growth, till you find your clients, you can use our team, you can rent our team. And that's the concept that we have put in the market because we used to get that question a lot, saying that I don't want to invest too much to start with unless we see that we can really succeed. So for time being, for 6 months, for a year, for 2 years, some of the clients have remained with us. But there is always a way out. The digital is another way. So there are a lot of brands, consumer brands, FMCG brands, food brands. They try and go online first strategy. So especially market like US or UAE, which is in next neighborhood, but I don't want to invest too much unless we see that I can succeed. You build online first brand, online first business. And then once you start looking at the numbers, demand data, you see that, okay, I can use these numbers and I can excite my offline retailers, distributors. I can get easily the partners. The data shows that I'm ready to invest, throw my resources behind it. Is when we go in. Yeah. And so you can do it yourself. If you want to find an international logistic partner, warehousing, you spend some time, maybe temporarily for 2, 3 months, you appoint one of your team members to fix those things and you can go on your own. If you think you need help, Ankur and I, our entire team, we can help you as well. So some of the projects we do where if you want to go online first, we kind of offer you ready-made supply ecosystem, be it warehousing, be it online store management, managing account with platforms like Amazon, listing with other platforms. Let's say if you're going to US, then Target and Walmart and many other platforms besides Amazon. So we do end-to-end as well. So whether you do it yourself or you ask us, but this could be another strategy of going online first.
Right. There is a client who's already exporting to Africa, and he's saying that going to African market is good based on the consumption criteria, but receiving payments from them is a tough job. How can you support in this matter?
Okay, interesting thing is we agree, Ankur and myself both individually, before we even started our business for 15 years, Ankur, and 20 years myself were working in a corporate environment. And we face first-hand same problem. Yeah, so I agree with you. Ankur, do you want to share your experience?
Yeah, so Africa and I think Africa also is has probably earned a little bit of a bad reputation, but I think generally in international trade, securing payments is always a very big challenge. Uh, so it's always a trade-off. There are tools and mechanisms which are available to reduce the payment risk. So if you are, say, for example, exporting directly from India to Africa, a lot of the clients will probably ask you for payment terms of, say, 30% advance or 70% on delivery. uh, but there are good reputed clients who would be able to offer an LC. Now LC comes at a cost, but it ensures that if it's from a reputed bank and it is confirmed by a global bank, which also comes at an additional cost, then absolutely, payment it's quite assured. Then there are always available from India. If you are exporting, you can work on the export credit guarantee scheme offered by the government of India, where some of the risk is also passed on, and it's a way of Indian government to promote Indian exporters. That's another solution. So there are ways and means of working around the payments problem. Yes, of course, if you have a local office somewhere in Africa and you are giving clients credit, then the solutions would be different. But in exports from India, if you stick your guns around the payment terms, even if you have to negotiate on the cost and price, I think there are reasonably safe solutions available.
And even if you are going in the market and say beyond exports, for example, you are setting up or doing something local, if you can find a good local partner, check the credibility, do the due diligence, I think that solves a lot of problems. So in Africa, they popularly say that, the few bad potatoes is spoiling the whole name. And that's true. So it's not everything is a challenge. As long as you find the local partner, probably you work with a particular segment of customers, or you ensure, like Ankur said, even at a slightly extra cost, if you ensure the guarantee of your payment, you can use those tools and those ways.
Sure. Let's take one last question. It says that you would help only in the initial setup, or you will be helping post entry as well.
Okay, so we we come for the whole process. Like Ankur explained, the advisory, the setup, and the operations, right? So if you are deciding about which market, or if you have decided the market and say whether to go or how to go, that's an advisory space where we come and we help you understand so that you go in with the confidence. Whatever way is the route market and you want to set up, you want to set up your own company, you want to set up distribution, you are looking for a partner. We work with you throughout the process, ensuring your success in that setup phase. And once you're up and running, like there was a question about the team. If you are up and running and say, no, I don't want to invest so much upfront, I don't want to invest into talent, I don't want to invest into setting up everything myself, we help you also operate in the market, right? So anything end to end where you need our help. The business model that we use is that we have our own team in most of the markets. We also have our partners in their services where we facilitate our clients. we don't do it in-house, but we have kind of evaluated multiple partners. We have done our due diligence and we have ensured that you get the best. So that's the value we add when we get the partner on board as well. Because such cost is risky and is very high. It takes time. And that's the exact value that we add. So if you're going in a market and you're looking for support, we are there throughout the support. And once you feel confident, once you feel established, is the time when you can have wings and go on your own.
Great. Thank you. Thanks, Ritesh and Ankur, for the insightful session. I'm sure our clients have got a lot of new perspective today. We have your credentials right on screen, and we'll be sharing the details on email as well. So whoever has any more questions, any queries, can reach out.
Fantastic. Thank you. Thank you, everyone. We had a pleasure interacting with you with this great bunch of audience. And we would love to hear from you, be in touch with you. You can write to us. You can get in touch with us on phone call, on WhatsApp. We are based in Dubai. Our headquarters is here. Our offices are across, but we are just a phone call or email away. And thank you, Reena. Thank you, CR Forex team, for organizing this. It was a pleasure interacting with everybody.
You're welcome. Thank you.
Thank you.
Thanks.